Hey everybody, George Adair here. Thanks for joining me on air with George Adair's Small Bites Edition. We try to keep this one quick and brief, stimulate a good conversation with guests like the one I have today, Rob Stroud of Farmers Insurance. Hey Rob, thanks for joining us today.
Hey, what's up, George? How are you?
Just doing great. A lot better than the current insurance climate of California. We used to have to worry about fires and all these calamities, but now we have to worry about how do you actually get insurance to cover them. Tell us about the current climate of insurance for homeowners and future homeowners in California. So I know you're up on this stuff.
Yeah, so I just got back from a conference, and the climate it's actually gotten more difficult than it was before. We had a Farmers is open first and foremost.
Mm,
There's a lot of people out there that call me every day and they say, "Hey, I read this or that." I don't know where they're reading that.
mm,
I actually called our state executive directly and I said, "Hey, are we putting out media that we're closing?" And he said, "Absolutely not. That's
okay.
that's not even been verified." He said, "We are just letting them run with it and we're not correcting them because we went from receiving about 700 quotes per day as a company to something like 3,000 requested.
Oh,
It's
wow.
like just gone crazy." So
Wow.
we I think we touched on this that we have a cap right now of 7,000 new business policies we're allowed to write per month as it is right now.
Mm.
With all the other carriers that keep leaving, we just got word that I want to say it was Liberty Mutual also now is gone, and that just was announced while I was at that conference. And there's another carrier, another Asgard, just decided to leave as well. So
And we
it's
can't minimize that State Farm is sort of the first one that
right.
made the
They were
headlines, but
the
Allstate had
giant,
already left.
yeah, the giant domino was State Farm, and so
Yep.
now what I'm concerned with is that as of the 4th of August, we
Yeah.
were like 2,500 issued already of the 7,000 that we're allowed to go to.
Whoa,
So
that's fast.
right, and so
You're filling up. That's what's happening,
I,
right? You're filling
yeah,
up, and you can't necessarily meet all the demands of farmers, but you have other carriers you work with. And
yeah,
that's important to note, right? Because working with a local insurance agent.
we roughly have like 300. The
Oh,
thing
wow.
is that they just aren't all taking new business is where it's
Yeah.
at. So it's one of those things where they don't want a ton of market share. So when they lose a couple points, then they'll
Hmm.
open back up. And that opening, you have to kind of be like lucky as lightning strikes. You have to just send it over and then they kick it right back. And you're like, oh my gosh, they're gonna bind. It's
Well,
like that.
what about the idea of a competitive marketplace where the big guys have left, like State Farm, Allstate, and I think you just said another one like Liberty. They're still weird, strangely advertising. I see commercials in our local community advertising Allstate for homeowners, which doesn't exist in California. It's really bizarre. But do you think it creates a void, a vacuum for other carriers to come in and go, well, we weren't going to play in that arena in California before because our premiums would have had to be too high. Now we're willing to, since we're still cheaper than a California Fair Plan. Is that happening?
Yes, and it's happening with so Kemper was the one I was trying to think of that just left too, which is
Uh-huh.
another use a lot of. But what is happening is companies like Kinsale and other carriers that I've never heard of
That we
before,
have certainly not heard of.
and they're coming in and they're offering a policy. It's actually more expensive a lot of times than the
Is
fair
it?
plan full policy. So I just
Mhm.
looked at one the other day, and it was $38,000, and
Whoa, for an
with a
annual premium.
right, and
Wow.
it was actually eligible with farmers, and it was I want to say we were 18,000, which I thought was almost like your stomach goes to your throat when you
It
hear
does.
premium.
And I think what you're giving us is a perspective that the current marketplace is not going to be $1,200 a year for insurance in a lot of homes. Or if you're near foothills, if you're near areas where there's fire calamity happening in the past or hasn't happened, I hate to say yet, we
Right.
all knock on wood, but it could. The insurance carriers are going to charge you for it. They're probably only going to give you a liability policy, right? And then you've
Yep.
got a contents policy, and then you've got to get the fair plan. So tell us what the fair plan is quickly.
Yep. The California Fair Plan is for homes that are ineligible for fire insurance based on the guidelines of whatever insurance company is you're quoting with. A lot of us use the same rating system, but
Mhm.
but they're so in line with each other that if you're not eligible with if everyone was open, if you weren't eligible with State Farm, you most likely weren't going to be eligible with Farmers.
Got
They're
it.
that
And
line. There would be maybe some outliers here and there, but we're all pretty much in line. And it has to do with the kind of risk. The biggest
mhm.
would have been something that we've spoken about many times. That's concentration of risk. So if
Mhm.
Farm concentrated in Fountain Grove, and then State Farm was, let's say, concentrated in Shiloh Estates, then
Yep,
maybe
yep.
Farmers take one there, and State Farm would then go to someplace to, Fountain Grove. So it'd be a little bit different like that kind of a thing.
Yeah.
But what the fair plan's designed for is for people that could not get it, not designed for a market like this.
Yeah.
So
So it's old too. Didn't it come out, did something like in the
yes,
60s or something?
yes, the 60s. The Watts riots is when it started because
Oh,
companies wouldn't start. They started basically saying, no, we can't offer insurance there for fire or whatever. So
hmm.
this is a state produced policy. And I had never heard of it pre Tubbs fire.
Oh,
And so it
wow.
was things we started using for cabs in Bear Valley or
Yeah.
cabins in Bear Valley and stuff
Right.
like that. And now it's like we're kind of using it everywhere.
So it's
And
now it's like the policy of last resort, and it's expensive. In fact, it seems to be like 3 or 4 times as expensive as what people are used to. And what
people 5x,
Oh,
honestly.
5x. So it's 5 times even in some cases. I mean, I have clients that are literally losing their buying power. And that's where I want to jump to the pre-approval process. If you're a homeowner right now, whether you're a first time or 10th time homeowner, you need to look at insurance as part of your pre-approval and get the call in early, right, Rob?
Right away. The first thing I've been telling you, I tell anyone that will listen to me, and I'm like a parrot. I've said this so
Yeah.
often.
Yeah.
Send me the address, send me your full name and date of birth. I'll run them both for you. Even if it's not a quote, I just say, yes, you're eligible for this house.
Yeah.
Yes, I can find it. And then we have to deal with the 7,000 PIF cap,
Right.
right?
Right.
And then we talk about that because I'm telling you, George, if something doesn't change, that's going to get reduced to 3,500 and then it'll get reduced to 2,000. If we're
So
the
then
only
people just can't get policies.
it'll get pushed to the first of the month is what'll happen. So I'm gonna just warn the people listening is that you might have an escrow fall to 45 days. You might have an escrow
Wow.
that won't close on time.
I want to
If
clarify this
you're
point real quick.
not in like complete line with your insurance agent to get that thing issued, you might have a problem with getting it closed on time.
So I'm gonna listen to what you just said. For it's first time I've ever there amateur hour, right? My phone's not turned off. I'm gonna kind of restate what I think I just heard you say, which is the first time I've seen this, which is that if you're gonna be competing in the California market to buy a house and get insurance, you may have to close in the first week of a month to be in the quota of the
Yep.
insurance carrier.
The first few days.
Oh my gosh.
That's why there's a massive meeting tomorrow that I'll be on, and basically I'm concerned that they're going to say, "Hey, look, we didn't get the rate that we've been negotiating for, so we're going to stay open. However, we're going to even lower our cap some more because we want to still be open in California. We still want to help our clients out,
Yeah.
and I could even see it getting so bad where they give an allotment per agency at some point,
Wow.
because based on prior production or something like that, because they're not going to continue to just take on all the risk.
It's amazing. We're coming up to the end of our time. I promise our viewers a quick podcast here. What I want to do, though, is invite you to watch our next episode where we're going to dive into how do you solve this problem and how do you as a homeowner really get into a situation that you can afford. So I'm George Adair. Thanks for joining us for On Air with George Adair Small Bites Edition. Rob Stroud, how do people get a hold of you if they want to talk about insurance?
Yeah, give us a call here at the office at 707-546-2010. Someone's always here. We got a 7-man staff and some ladies. We can help you. We're happy to.
Oh, that's great. Hey, thanks for joining us on this first episode. Folks, watch for the link to the second episode coming up here in just a few.
Thanks, George.